Hello, welcome back to the Property Pilot. Today we're talking about what you need to obtain a buy-to-let mortgage. Welcome back. We're talking about what you need to qualify for a buy-to-let property mortgage. And this is a really important video because we're talking about several different factors and several things you need to consider even before putting and submitting your application for your buy-to-let mortgage. So let's start off with the definitions. What is a buy-to-let and what is a mortgage, and we can put them together and understand it. Well, a buy-to-let is where we're buying a property and letting or renting it out. Nice and simple. What is a mortgage? A mortgage is where we borrow money in order to purchase a property. So put this together, what is a buy-to-let mortgage? It's where we're borrowing money from a lender in order to purchase a property to then let or rent out. Nice and easy. Well, if you haven't already watched my video on buy-to-let mortgages explained, which is a more comprehensive video than the one you're watching today, and it completely covers buy-to-let mortgages in A to Z, then I suggest that you do so. I'm going to link to it in the description. And do consider subscribing to the channel because it'll make sure you can see really good videos of this nature. And YouTube tells me the majority of people that watching this channel are not subscribed. So do me a favour, it means a lot to me, and consider subscribing. So let's get back to the office and we'll talk about this in a bit more detail. So to start off with this video, we need to think about structure. How are we structuring the acquisition of this property on which we hope to get buy-to-let mortgage? Is it through our personal name or is it through a limited company? And again, I'm going to link to another video that I've done on should you buy property in your personal name or a limited company below. Some of the points that I'm going to talk about are relevant and some are less relevant. And again, I'll mention these on each particular point as we go through the video. So first of all, credit score. What is your credit score? Do you have any idea? And if you don't, go to one of the websites that offer credit score checks. I like to use Experian, but there are others available. You can sign up. I think Experian have a free trial as well, and you'll be able to view your credit score. Now, I viewed my credit score a couple of days ago because I applied for some bridging finance on a property, and I was happy to see that it was 999, which is the highest score you can get. But if you don't know what your credit score is, I strongly suggest checking it out. And if you have a low credit score, there are different ways to build it up. And one nice and easy way to build up your credit score is, if you don't already, get a credit card, put all your purchases on your credit card, but make sure it's paid off in full every single month and you don't start paying interest and accruing more debts. And this is a really good way of slowly building up your credit score. CCJs, do you have any county court judgments? Again, these are things you need to think about. If you do, you want to be clearing these as soon as possible. You want your credit score to be very nice and positive. You don't want it to be a negative score. Next, let's go on to borrowings. What does your current debt look like? Do you have a car on hire purchase, or a leased vehicle or something like that? What are your outgoings? How much do you owe on your credit card? All these are really important things that lenders will want to look at because if your outgoings and your debts and your liabilities are too much, this is really going to hamper you in terms of obtaining a mortgage. So I like to operate as trimly as possible. Of course, have debt, but have good debt. Don't be taking out debt on things that are going to cost you, that are liabilities. You want things like properties, which really most properties aren't liabilities. It's a great asset that you're leveraging to provide an income for yourself. Okay, that leads us nicely on to income, which is really, really important. Some lenders will require a minimum income, and this used to be around 25,000, but a lot of lenders have now bumped that up to 30,000. So a lot of lenders will require that minimum income. Now again, this can be split into two different ways. So if you are employed through PAYE, then nice and easy. If your income is above that's great. But if you are self-employed, you'll need to prove this. So you'll need at least 2 years of history of self-assessments to show that your income is averaged above that level. What most lenders do is they will take an average over the past 2 or 3 years. Now, don't worry here if your minimum income doesn't meet that. There are lenders, and in fact there are quite a lot of lenders nowadays that will consider lending based on income that is less than this. So don't worry about that if your income doesn't fit that bill. Speak to your mortgage broker. He or she will be able to advise on which lenders they can approach that will consider your application. Okay, next let's come on to experience. Experience is really important. Is this your very first buy-to-let property, or in fact are you a portfolio landlord and you have 20, 30, 40 properties? So again, if you are new to the game and it's your very first property, don't get me wrong, it's a little bit harder, but there are lenders that will lend to you, and nowadays there are quite a lot of lenders for first-time landlords, so don't worry about that. But if you do have 2 or 3, it really does help you. It opens up to a slightly greater pool of lenders. And then even further, if you're a portfolio landlord like me, 5 or more properties, there are different lenders that you can approach that can have a look at your application and specialise in those types of acquisitions. Okay, age, let's come on to age, really important topic. Well, some of you may have come across this when buying your own personal home, your residential home. Lenders don't like that mortgage to last indefinitely. Once you retire, they want that mortgage to more or less be finished and be, fully paid off. But with buy-to-let mortgages, we do this in a slightly different way. Most buy-to-let mortgages aren't capital repayment mortgages like your mortgage, or most likely like the mortgage for your live-in home that you live in yourself and you own yourself. Buy-to-let mortgages normally operate on interest-only mortgages, where all we really care about is paying back the interest, not that capital. So again, age is really important here. So, if you are, say 60 or 70, there will be less lenders in the market available for that. Whereas, if you're say 20, 30, 40, 50, you're opening yourself up to a wider range of lenders because you've got more time to pay off that mortgage. Now, again, as I've just alluded to, we'll pay off the mortgage in a slightly different way, because most investors will take an interest-only mortgage. Will pay off the mortgage not by paying back the capital, but maybe upon sale of the property, or maybe upon remortgaging at some future date. There's lots of different ways to pay off the capital from that original mortgage. Okay, next, let's come on to a really important question. How much can you borrow? And this is worked in a slightly different way to buying your own personal property. So when you buy your own personal property, they'll take your income, they'll times it by 4, 4.5, 5, and that's more or less how much you can borrow. Whereas in the buy-to-let world, it's very different. It's all worked out on stress tests. What does this property bring in? And then we'll have a little multiplier upon that as a nice coverage. So let's go through an example. Let's say we're looking to borrow £100,000 for a property acquisition. Now at the moment, limited company buy-to-let mortgages are somewhere between 5.5%. January 2023 this is. Now, but what lenders will do is they'll stress test it not on today's rate, but on a future higher rate. So at the moment, this particular lender that I'm speaking with, they want to stress test at 7%. So we've got to stress test this £100,000 mortgage on 7%, which is a £583 per month interest-only mortgage payment. We're not finished there. What they then do is they multiply this by a multiplier depending on whether you're a lower or higher rate taxpayer. I'm a higher rate taxpayer, and they want to times that by 145%. And what that maths actually is 583 times 1.45, that's £845 per month. And providing your potential rental income is above £845 per month, that will pass the stress test, and the lender will be happy to lend you that amount of money based on those figures. So stress testing is really important, and that's how lenders work out how much they're willing to lend you. So make sure your property that you're looking to purchase will pass the stress test before you're putting in this application. You shouldn't be waiting for a lender to do this for you. You should be calculating these stress tests before putting in offers on the property. Another really important thing to think about is, do you actually own your own home? There are lenders out there that will require you to own your own home if you want to obtain a buy-to-let mortgage. But likewise, there are other lenders that are more than happy to lend on you if you don't own your own home. So a really important question to ask. And no one takes a little bit longer to find lenders that are willing to lend on this, and that's why it's really important to choose a mortgage broker who has experience dealing in these types of mortgages. Okay, the last point is personal guarantees. What are these? Well, if you're buying a property in a limited company, so not in your personal name, but a limited company, the lender will still require you to give a personal guarantee that in the event of this company fails and folds and cannot repay the debt, you personally are liable to repay it. So essentially, it's more or less the same as that personal ownership where, you still have to pay back that debt. You can't just shut down the company and that debt is forgotten. You're personally liable for that mortgage and for that loan. So that's something to think about if you're buying property in your limited company. And of course, what you have to do is you have to obtain what's called ILA, independent legal advice. So that's spoken to you about your personal guarantee so you fully understand what you're getting yourself into, and there's a small fee for this work. So that's what you need to qualify and to obtain and to get a buy-to-let property mortgage. I hope this video has given you a lot of insight into what you need to qualify for one, and maybe I've missed out one or two things, but these are really the important points to think about. And if you haven't already watched my previous video, a complete breakdown on buy-to-let mortgages explained, and we go into these topics in a bit more detail, please do watch that video. The link is in the description. And lastly, what should you do now? Let's say you're ready to get a buy-to-let mortgage, you think you qualify for one. Well, speak to a mortgage broker. If you're looking for a mortgage broker, you don't already have one, head to my website www.ms7.uk. I can put you in touch with the brokers that I use, I like, I know, and I trust, and I'll make sure they look after you. So thanks very much for watching the video. I hope you've got value from it, and I wish you all the very best.